And we are live. Everybody knows what time it is. It is not hashtag Friday Pie Day. We did do the stream on hashtag Friday Pie Day. It's the Wolfer Power Hour, baby. So welcome to the Wolfer Power Hour. We're going to do Bitcoin analysis. We're going to talk about previous trades. I'm your host, Drew Wolfer. Obviously, if you like content like this, dude, make sure you smash the like button. We're going to show you how we made thousands of dollars this week trading Bitcoin, okay? We're going to show you how we made thousands of dollars trading thousands of dollars on Bitcoin. We weren't trading 10 grand. We weren't trading 100 grand. We weren't trading even 9 grand, right? We were trading $6,000 to $7,000 on average. Most of the time we were only trading, 5 to 8, right? So that's why I say our average position size is somewhere in the 6 to 8K range. So you do not need a ridiculous, just absolutely astronomical amount of money to actually make gains in the market. You have to take A+ setups. You have to have rules. You have to do the things that no one else is willing to do in terms of risk management, in terms of position sizing. And you have to understand that this is not a sprint. It is a marathon. I apologize if I'm sweaty, if I'm out of breath, if I'm drinking a bunch of water and stuff like that on the stream. I was outside playing soccer with my kid. Obviously, everybody knows Sundays, Saturdays, stuff like that. That's for the fam. That's for the family. So obviously I was outside enjoying the Florida weather a little bit and trying to teach my kid how to play soccer. So with all that being said, let's get into our trades. We're going to do an overview of okay, what were our past trades for the past week, right? For these past 7 days, what trades did we take? What went well? What didn't go well, right? This is 100% transparency, right? What trades are we in right now and how, why, first off, and are they profitable? Are they going against us? What are we seeing in the market from an overarching perspective? Then we also have the weekly candle close in 5 hours from this exact time. So whatever time zone you're in, the weekly candle closes at 7 p.m. on Eastern Standard United States time. So watch out for the weekly candle close because that is going to tell us probably where we're going to be going in the near term future. I've got a charting pattern that you probably saw on the thumbnail, and we're going to talk about that. We're going to talk about an inverse head and shoulders that has started at kind of like these lows that I actually posted about on Twitter last night, where I said, hey, unless these criteria are met, I'm not taking a long trade on this inverse head and shoulders pattern, and I will give you the entries and all the stuff like that for that because it has not gone and hit my criteria yet. It has not actually confirmed a breakout on that yet, so you might actually have the ability to get in on that trade, but there are some overarching things that we need to take into account before we go and get into this long trade, right? That's, I'm in the short from the tippy top, right? I shorted at 101.5. I took profits down at 97, 96. And then, we wrote it all the way down to 92. We longed it. We did all these different things. We're going to walk through it. We're going to walk through all the top-down TA, and we'll talk about it. So first and foremost, let's get DJ Craigie. Shout out DJ Craigie to spin that track, baby. All right. That is not what I meant to do. Let me know if you can hear the background music. I can hear it for some reason today. So we are about to get it all the way popping on the stream. Let me know in the comments section if you're here. Give me something. Give me a like. Give me a subscribe. Show some love in the comments section. Tell me if the music's working first and foremost. Then secondarily, let me know if there's anything you want me to do TA on. We've got 57 minutes in order to do this. So if you are here from Twitter, make sure you come over to the YouTube stream. It's much more fun over here. You can comment. You can do all those things. Make sure you subscribe to the channel. Boom! Bang on the notification bell, baby. Let's get straight into it. All right? All right. We need a baby Drew on the screen, and we need a chart on the screen. Boom! All right. I love being able to hear the music, man. I'm vibing. DJ Craigie in the building. Let's get it. All right. First and foremost, let's review and recap our past 7 days of trades, baby. Our past 7 days of gains, baby. Let's make it rain, baby. Do what you need to do. I'm going to show you my past trades. I'm going to show you exactly how you could have copied these trades if you were watching these live. So make sure you watch the lives. All right. Boom. First and foremost, we are in a short right now. We've locked in over 18. I got to move my water out of the way. We have locked in over $1,800 in profits, baby. That's good gains. That's good gains. Everybody loves gains, right? Man, we could see this, if it goes where I think it's going, we could see this being like a $4,000 or $5,000 profitable trade. I'm leaving it open. I don't care what anybody says until my thesis is proven wrong, baby. We're pumping that short, baby. So we'll give you the long setups here in just a second. So this is, I'll tell you where I think my thesis is incorrect. But before we get into that, let's go for our position history and let's see what we've done. All right, obviously, first and foremost, we know that we've got about $2,800 locked in on this position. We don't know if we can't put that on our position history because it has not printed yet. We know we're guaranteed at least 1,800 profit on that, right? So let's look. We had a $138 profitable trade. We had a $578 profitable trade. We had $234. We had $15. We had a $1,900 profitable trade, baby. That was a long. We liked that. We had a 91-cent profitable trade. We had a $4.74 profitable trade, right? Those I basically count as breaking. We had lost $138. Okay, so that's our first loser if we're scrolling down and we're looking at this. We got 1, 2, 3, 4, 5, 6, 7 winners or break evens, and then 1 loser. Then we've got 421 winner, $50 loser, a big whoop. I guess I lost my shirt on that one, right? So we've got 2 losers. Then we've got a 110 winner. We've got a $70 loser, a 220 loser, a 250 loser. And this is because I was like, okay, I know my thesis is wrong and I need to start going long, which is exactly what I did if we break these levels. So my stop losses got hit, bing, bang, boom, I'm out of the trade. But guess what happened right before that? We hit a $112 profitable trade, a $250 profitable trade on shorts. We hit a 26, a 22, and a $714 profitable trade on shorts and longs. And then we had $7 in the negative. So we had 1, 2, 3, 4, 5, 6 losers, and we had 2, 4, 6, 8, 10, 12, 14 winners. So our win rate was above 67%, baby. That's what you want to see. You can literally lose this 10 times and still not take out the profits made on this trade, though. We could have literally lost this 10 times in a row. $138, and we'd still be $600 or $500 profitable on this trade right here. So you don't need a super high win rate in order to be profitable. It's all about risk management, position sizing. Let's go. That's what I'm talking about. I'm going to keep preaching that. Everybody hates it. I'm going to preach it because at the end of the day, if you're not securing your capital, how can you expect the markets to, right? If you don't care about your own money, how can you expect anybody else to? If you don't respect your own bankroll, how can you think that someone else is going to be out there respecting it? And you're trading with the top 1% of the top 1% in this market. So do you want to take their money or do you want to hand them yours, right? So proper risk management, proper position sizing is the absolute name of the game. It's one of the things I'm always going to teach, and that's that. So keep doing what you're doing if you are copying these trades and you have proper position sizing and risk management. Keep doing what you're doing because I love it, baby. Now, let's get back to the profitable trade. And first and foremost, we're going to pull up that Bitcoin chart, baby. Drop it. Let's go. All right. So what we see right here, this is what was on the thumbnail, and this is not necessarily super exciting, but there is an inflection point, like something's about to happen. It's either going to be big up or big down, right? Obviously, the market, in my opinion, is favoring more big down than it is big up because you have a massive resistance up here at about 102.5, right? So that's kind of the level that we're seeing right here. Is just, I would even say right there, 102.5. Okay. Then the level that you're seeing for this measured move on this is about $82,300. And even if you went 75%, you're looking at about 80, I call it 86, 85 grand on this move downwards. Okay, so what is this? This is a bear pennant, okay? This is not what you want to see. In a downtrend, you do not want to see a bear pennant looking like this, okay? And what do I mean by a downtrend? Downtrend, right? We're consistently going down. We're setting lower highs, right? Lower high, lower. This is our all-time high, lower high, right? We're setting lower lows. This is our low, and then this was another lower low. This could be a lower high. Even if we came up here, this is still a lower high. Even if we came all the way up here to 101,922, this is still a lower high, okay, for that range. So just keep that into the back of your brain, like burn it in the back of your brain, that the market is actually favoring downside, unfortunately. But if you've been watching my channel for long enough, you know what my bias is. We come down here, we bounce from the 80K level, and we hit it to new all-time highs, baby. 74 is the line in the sand. Everybody knows that if you've been watching my channel for long enough. If you haven't, sorry about you, but at least now you know, right? We'll talk about Sol here in just a second. David Mendez with the request. I appreciate you, my friend. And we've got Dexter right here. This person shows up every single time. I love that. I seriously much love you for doing that. Still haven't set up my VPN to access Bit yet. I'm just here to figure out what price level to sell IBIT puts this weekend. Okay, so IBIT is the Bitcoin Trust. He's saying the Bitcoin Trust, if Bitcoin pumps, then the Bitcoin Trust goes up. If it dumps, then it goes down. Okay, now what do puts mean? Put is basically saying you're betting that the market is going down. It is a stock market instrument that you can use on any regulated type of stock brokerage exchange like Charles Schwab, which I highly recommend. That's what I use. Thinkorswim's platform. And what he's saying is I'm going to take a 100x leveraged position on IBIT. I'm probably going to bet $500 for, $50,000 worth of leverage on that. And if IBIT moves a little bit to the opposite side, then he's going to make some seriously big gains. I've actually taken a $300 account on TD Ameritrade before it was bought out by Charles Schwab. I took $300 and turned it into like $6,900 in a matter of weeks, trading only options. Options are extremely powerful, but they are also guaranteed no matter what, 100x leverage, which makes them extremely risky. So be careful with that, my friend. We are, we're praying for you. Okay. So with that being said, let's get into the rest of the charts, right? What are the other things that I am seeing that are actually bullish for this? Because we see the bear pennant. We know what time it is. I'm going to move this all into my folder. What's this horizontal ray? Yep, right here. This needs to go into this folder. Boom. Okay, so we know what our kind of like decision-making criteria is right there, right? What else has happened? Inverse head and shoulders, baby. If you follow me on Twitter, you know what time it is, right? Let's go to x.com. I'll show you exactly what I'm talking about. Well, that is not x.com. That is my bad. Boom, x.com, Drew_Wolfer. Go hit the follow button or whatever it is on this platform. I don't know. Follow, yeah, something like that. Subscribe or follow or do whatever. I'm streaming live, whatever. You see it. Right here, I gave you the analysis on this, right? I gave you the analysis on this. I gave you everything that you needed to know and to understand what this pattern could give us, right? Now, if you go and you look at the chart, this was literally last night. And I said, hey, man, one other reason why I'm not going to take this trade right now is because I will likely be asleep for it in the United States. And there's no way to set up a trade for a long whenever price is below your triggering event, which if you know what the triggering event was, it was $95,230, confirming a candle above that. Now, we did do that, but we did not confirm a candle above it, okay? And I'm going to show you and walk you through what that confirmation candle should have looked like in order for us to be able to take this trade. But before we do that, we're going to show you what the levels are and why this is a inverse head and shoulders pattern that could have potential upside all the way to literally about $99,500. And if you do the 75% of the measured move, you're looking right here where this wick is at about 98.3. Okay. So if anybody knows where my short positions are, where I'm going to be adding to my shorts, let's just look at it, baby. Let's just look at it. It is 98.4. Surprise, surprise, right? We've got 98.4. We've got 99.7, which is just right where we would hit the top end of this 99.6, 99.7, which is right where we started that big God candle dump, right? So that's where I'm going to be adding to my shorts at. And then also I've got one at $97,000. Why do you have it at $97,000? How, Sway? Why, Sway? Because we got a previous swing high right here that's going to serve as a resistance point. And we also have the 200 moving average, which is a dynamic support and resistance that we're going to run into. So if we could potentially wick above that, it'll probably be by about $600 to $700, and it is sitting at about 46.5. So 97.1 could be a nice little entry if you happen to give a F, right? Now, let's go over the criteria of this pattern, okay? So left shoulder, head, right shoulder. the shoulders need to be at most probably 50 to 75% as tall as the head, right? Check and check, right? They need to be pretty symmetrical to each other, meaning that they have close to the same lows, right? On an inverted head and shoulders, that is. Check. They need to be at a low. The head, at least, needs to be at a range low. Check, right? This low is actually lower than this low, which is lower than this low, which is lower than this low, which is lower than this low. So, I mean, this is a really, really key low right here, okay? So check. Then your neckline needs to be slanting either downwards or a inverted head and shoulders, or at the very least, it needs to be level. Check and check, right? Now, what's the criteria for this bad boy to break out? What do we have to see in order for the shoulder and the right shoulder to just moon us on that inverse head and shoulders pattern? We need to see a candle breakout, which we saw here above this neckline, which is this little green kind of dotted thing. But that's why I added this white line just so that people could see it a little bit more clear, right? We did see that. Now, what has to come after that is a subsequent candle. You have to stay above this green line, right? And not close a candle below this green line, which we did not do here. But let's say that we did, right? Or let's say that we closed a candle above that. The way that you would confirm this pattern is this candle right here, or maybe even a couple of candles over here. So long as you don't close a candle below the neckline, it remains valid, right? And then once you close a candle above the close of this breakout candle, that's when you can start thinking about the moonshot, right? But where you would want to enter is on a retest of the neckline. So in a perfect world, what you would want to see is this big, fat, just big dog, big daddy green candle, baby, big money, right? Then the next candle after that is a smaller candle that closes above the close of this candle, and then you retrace back down to this neckline, you kiss it, you enter, and you put your stop loss probably below this swing low right here, right? Because if you don't put your stop loss under this swing low, then, you know, you're probably going to get stopped out if you put it like super tight up here. But my point is that these wicks can come down and kind of stop you out. So if we break below this previous swing low right here, which was a higher swing low than this swing low, and we set a lower swing low, then that would be a break of market structure, and this head and shoulders would not play out, this inverted head and shoulders. But say it just bounces here. You place your stop loss above this previous swing low, and that gives you one hell of a risk to reward ratio on a potential long move right here. And we're going to set it up and show you exactly what that long move would look like. Okay, I need to turn the magnet tool off. Say you enter here, right, for a long position. Well, I don't know what the heck's going on there. Okay, boom. What is going on here? Oh, it's got my tool is magnetized, so it keeps dropping more trades in there. That's my bad. Okay, cool. Here we go. So you drop it down here below the previous swing low, and then you target that. And you're looking at a 1.25 risk to reward. My bias is I would actually set it just under this 50 moving average. Why? Because this is going to be a massive, massive support. So that's where I would probably put it. And I've got a 2.5x risk to reward. Worst case scenario, you get out right here and you've got a 1-to-1 risk to reward on that trade setup. If you want the trade, if you want that trade, holler in the comments section. Give me the trade. Not in the comments section, right? My bad. Give me the trade and send it to this email right here, drewwolfer.com. info@drewwolfer.com. Subject line, give me the trade, baby. If you want that trade, go ahead and send it over there, and I will show you exactly what I'm talking about. But let's say that this doesn't play out, because what we also had was a little bit of other bullish indications. This is what is called right here. This is called a bullish inside bar pattern. What does that mean? This is a big bullish green, big daddy God candle, right? That took us massively up here, ate up all of this right here, all of this downside, right? Every candle that has come after that has been inside of this candle body right here, this big bullish green candle. This is what's called an inside bar pattern. And in an uptrend, this is extremely bullish. Now, at the bottom of a downtrend, could this signal a reversal? It could. All eyes are going to be on the S&P when it opens literally tonight at 6 p.m. Eastern time. Okay, so if the S&P opens down, Bitcoin is probably not going to break out of this inverse head and shoulders, and it is probably going to break down outside of this bullish inside bar pattern, and it's probably not going to go up. And then you're going to be targeting somewhere in this realm around the 90K range, right? So that's what I'm seeing on Bitcoin right now. Those are your potential trades. You've got a short trade that could see you taking it all the way down to the 80K ranges, right? And then you obviously have the bigger head and shoulders. This is why I also caution people on this little head and shoulders right here, because look at this head and shoulders. Look how big this is comparatively to this head and shoulders. That is tiny. It's about this big compared to a massive, massive overall market trend head and shoulders. That's all I got to say, man. So which one's more likely to play out? The larger time frame, the bigger charting pattern, or the smaller charting pattern that would still see us come up to this previous swing high and still be inside of this shoulder? You could see this play out and still break down on this head and shoulders pattern. That is my point. So even if this does play out, the larger pattern is still valid because you have not broken out of the right shoulder, even if you retrace all the way up here to the measured move at 100K. Okay, so that's kind of my point on this. So just be extremely, extremely cautious whenever you are entering a long trade here. We do see a little bit of a rounded bottom, but you don't see that rounded bottom continuing upwards. And here's the other problem that I'm seeing. Look at this downtrend. Okay, look at this downtrend right here. Look at this uptrend. Look at the volume on this right down here, right? Massive volume. Look at the downtrend. Again, massive volume, big, big, massive candles. Look at the downtrend here. Decent sized candles, decent sized candles. Now, look at this inside bar pattern. The only large candles that we have had that even come close to these size of candles, these size of candles, these size of candles, these size of candles, or these size of candles is one big selling candle literally right there. Everything else is basically like zero volume. Okay. So that's why I'm saying this move to the upside, if it was really, really going to be like super conviction, in my opinion, there would be a lot more volume happening in this range right here over the weekend, especially whenever Bitcoin isn't being kind of suppressed by, first off, institutions trading it, a lot of retails trading it. Secondarily, it's not being suppressed by the futures market on S&P because that closes at the end of the day on Friday. So you have all week, all night Friday, all day Saturday, and the majority of the day and evening on Sunday for that to not be affecting Bitcoin going up, right? So my point is that since we don't see a lot of volume here, what this kind of like points out to me, this right here, and having essentially no volume down there, what this kind of indicates to me, in my opinion, is they're waiting for this to happen. They're waiting for the open of the S&P to see, like, are we going up or are we going down? And you can, base your direction based upon what happened there. Now, that's why I'm not taking a trade here, because I don't care, man. I'm already in a friggin' short, okay? My short's already up big. So if we do continue this move to the downside, all I do is make more money. If we come up above here and we say confirm above this $2,000 or $95,200 level, and we confirm a candle above it, and then we back test it, all I do is flip long and I keep my short trade open, and then I try to ride it up as far as I possibly can. My first take profit being right here at the 200 moving average on the 1 hour chart. And then my second take profit probably being right up here at the low end of this move right here, which would be about $98,000. And then my third take profit would probably be right up here at the $100,000 range. And then I would probably add to my short as soon as we got up there, as you can see by my open orders history. I'm adding at 98.4. I'm adding at 99.7. And if we get up there and we start topping out, I'm definitely going to be getting my fills on these orders, and I'm going to be watching volume as it's going and seeing what happens with the moving averages and the stochastics and the RSIs and things of that sort, right? Now, here's another reason that I didn't even look at, because I try to keep my charts as simple as possible whenever I'm doing TA for people. But I want to show you some of these indicators, right? What's Market Cipher B telling you? Well, money flow just came out. That's what this little red line is right here. Money flow just came out, which means money is not flowing into the market, right? we see lower highs on this momentum right here from this high to this high, right? And let's see where that high started at. Right here and right here. So at the same price point, we're seeing lower highs on momentum, right? And we had red dots at both of those price points. So that's a key area to be shorting at, is these areas, 95.4, 95.5, right? Somewhere in that realm. Then you're also seeing the VWAP crossover happen to the downside. This red dot right here could be printing after we get off of this stream in 36 minutes. If this prints and the VWAP does come down and then your money flow is still in the negative and it starts getting bigger, right? And your VWAP crosses to the downside as well as your momentum coming back and crossing to the downside, it's not looking good for Bitcoin. The same thing that I'm seeing with the RSI right here is you see kind of like a bearish divergence almost, kind of like a hidden bearish divergence, but you know, in any case, could potentially be a bearish divergence. You're seeing a little bit of a higher high here, right? And then if you look at the RSI, it's trending downwards, okay? So lower highs here, right? Then if you look at the stochastics were at 100 and they were massively oversold or overbought at this, you know, level. And then we started tanking downwards. We crossed the signal line right here, which is the blue line crossing under the red line. That is a signal line crossover. We still have not came out of that overbought territory, and we're probably going to be targeting somewhere down here, or at the very least, probably about right there. So if you look at the previous move that happened on, it was Friday the 10th, right? You can see what happened. We went all the way from friggin' $95,300 all the way down to $92,300. So my short position is looking juicy right now. My short position is looking like, hey, you hold that bad boy. You hold that bad boy, right? And you let it do what it does. And as soon as your thesis is proved wrong, which it would take a lot to prove my thesis wrong, it would take, here's what it would take. We would have to break above this high right here. $102,700 is where my thesis on the market continuing downwards would be nullified. Okay, so like down here, people getting bullish here, that's not proving my thesis wrong, because what we still see is this downward sloping downtrend channel. And I'm going to try to find it somewhere in my chart here, because I know I already have it in a folder. Yep, here it is. So there's your downward sloping trend line, right? This is kind of your, this is almost like a kind of like a falling wedge pattern, potentially, but you've got a long way to go to get up to the top of this wedge, and you've got a long way to go until you get to the inflection point. And with everything that's happening inside of Bitcoin right now, like we thought this could have been a W pattern. Well, that got nullified as soon as we came down here. We thought this could have been a WV pattern. Well, that got nullified. We also saw a potential WV pattern right here on the 1 hour chart, and I'll show you exactly what I'm talking about. We're gonna have to zoom way in for this bad boy, but this also got nullified. Okay, so this is what a WV pattern looks like. Boom, 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 and then you want to see it retrace here and then bounce, and then you can copy and paste this to see where it could potentially go, right? So let's take it. It would be going to about $95,300. So it actually hit. It actually hit that WV pattern, even though, here's my point, what you want to see is that come up immediately. So this is not a valid WV pattern, even though it would have hit the target. It's not a valid WV pattern. Why? How, Sway? How, Sway? You ain't been doing the education. You don't got the answers. Yes, I do. We hit, this is a previous swing low right here and a previous swing low right here. And once you take out those swing lows, the WV pattern is nullified. Even though it played out, irrelevant. I don't care. I trade based on rules. I trade based on probabilities. I take A+ setups. That was broken right here. I didn't take the trade. That's that. I don't care that I would have made $300 here, because guess what? I'm still taking massive profits on the way down. Don't care, right? Trade based on rules. Trade based on risk. Trade based on math. Trade based on probabilities. Probabilities are favoring downside right now. As much as everybody hates to admit that, they are. Especially once you start getting into the weeds and looking at these indicators, man, probabilities are favoring more downside, at least in my opinion. And there's your downward sloping trend channel right here, which it could bring you back up to about $97,000 if this head and shoulders plays out. Guess what? You have your resistance right there. This inverse head and shoulders runs the gamut all the way up to the resistance on this, which is bam, right there. Look, if you took this up, right, and you measured this, say we break out over here and it takes us a few hours to get out, right, you're going to see it running into this support level or this resistance level, right? Say it takes us until, I don't know, let's see, say it takes us until Monday to do it, right? Boom, you're already running into this resistance level right up here. Okay, so that's kind of my point. Just take all this for face value. Understand, let the charts tell you exactly what they're doing. And I promise you will not regret it if you let the price tell you what's going to happen, right? So now, I want to look at a fib retracement. So as you can see, from the low to the high here, we came down and we did a full measured move, and then we retraced all the way back up to the 0.618. We flipped this 0.618 from support, right, on the way down to now resistance, and we banged up against it here, right? We banged up against it 1, 2, 3, 4 different times. I'm favoring a fall here. Not to say that you can't go up. I'm not saying that you can't go up. I'm just saying that most things are favoring downside right now. And probably the best thing you're hoping for is to come up here and test this 200 moving average right around 96.3, which is right under the 0.5 fib, right? So let's take that fib off and let's draw another one and let's see what happened with it, right? Let's take it from this high. Let me put my magnet tool on really quick just so that we can make sure that we got the real deal. Holy feel. Bam. And then you take this down to the ultimate low of this range. I'm going to see if I can zoom in because this thing's tweaking out on me. Boom. Yeah, friggin' the magnet tool. So as you can see, we came right up to the 0.382. Boom, rejected, boom, rejected, boom, rejected, boom, rejected. Like, I mean, my guess is we're probably coming back down here to the 0 line, right? Now, your 0.618, your 0.5 is at the same level, right? Just above the 200 moving average. Your 0.618, guess where it is? 93.3, baby. Where's Drew's short position again? Dude, TA is awesome. I love TA. Math is awesome. Math is cool. If you don't like math, I don't know what to tell you. 98.4, baby. 98.4. And if you want to know why my price is at 98.4 instead of 98.3, it's because in futures, they front run the price. So if you're going up, most likely if the price is at 98.3, it's on a futures perpetual contract, it's going to be at 98.4. Same thing. If you're going down, right, and price is at, say, 92,000, it's probably going to get front ran by about $100. It'll probably be at like 91.9 on the futures on this perpetual. So if you want to understand the nuances as to why I place my orders, my take profits, my stop losses right where they are, that's exactly why. I don't understand why you drew the head and right shoulder ending at the candle you did. Why not draw it at the breakout bar? What breakout bar? There's no breakout bar. There was a breakout try. They tried to break it out. Let me pull it up for you and let's see if we can decipher what it is that you're talking about. On the 1 hour. Yeah. No, I know what you're talking about. I know exactly what you're talking about. Okay, because it doesn't matter if okay, so I'll show you because this is the neckline, right? So where this doesn't matter, the starting point, if I put it over here, that doesn't matter. The ending point, if I put it all the way up here, it doesn't matter. It does not change the neckline, my friend. That's why I don't do that. I could put it up here. It doesn't change the head and shoulders at all, right? It actually makes it look way less congruent, though. We'll say that. It makes it look way less congruent if I do that, right? Let's zoom in and see what the head and shoulders pattern looks like now. Does that look like a really good head and shoulders? Not really. So whenever you put it over here, like it looks a lot more congruent, especially since this was a false breakout candle. So I mean, that's just really what it is. The neckline doesn't change again, because the neckline is derived from where the shoulder meets the other shoulder. So where the end of the first shoulder meets the beginning of the second shoulder, that's where the neckline starts, which is where you see the head forming. So at the beginning and the end of the head, that's where the neckline is, right? So it doesn't really matter whether you take it all the way up there or not. I got a little bit off track. I forgot what I was even talking about. But with that being said, we know exactly why we're targeting that, right? So we've got our fib levels up. We understand what we're looking at. We've got our visible range or our fixed range volume profile. If you look down here, we understand why we long and short where we longed and short at, right? You long here, that's what I did. You short here, that's what I did. And I still have this short position open. I took this long position off the table in profit because I did not see the upward trajectory continuing. Did I take a few scalp longs in here? Absolutely. Go into my history and you'll see that I took scalp longs. For some reason it logged me out. Whatever, it is what it is. But you guys saw it earlier. So if you don't remember seeing it, rewind the track, DJ Craigie. Rewind that track, baby. So with that being said, that's kind of what we're seeing on Bitcoin right now. I'm favoring downside, especially since we see the 200 moving average all the way up here. Man, I mean, we're trying to lose right now. Like, okay, here's the other thing that I put on my Twitter post as well that I forgot to talk about. When you are seeing moving averages that are this close to each other, like this close, like you can't even barely decipher where they are. That is the 9, the 20, the 50, and the 100 all clustered up together at price, right? The only one that's not there is the 200, right? And it's trending downwards. It'll be there eventually, right? It'll take a lot longer for it to get down there, but you see what I'm saying? So when you see this coiling up, a big move is coming, whether it's going to be to the upside or the downside, right? Whether it's going to be this or that. Oh, hold on. Whether it's going to be this or that is yet to be determined, but we do know that, you know, majority of the time when you see this coiled up like this, there's going to be a massive move one way or the other. And as it sits right now, it's looking like it's favoring downside. Why? Because of all the reasons that we just said. And then let's go to the 2 hour and see where we're at. Yeah, we're still below the 200 moving average. Massive rejection right here. Massive rejection right here whenever we went and tried to back test it. Like, that's just the 2 hour, right? And we're coming back down to try to, you know, fall through these. You've still got the 100 trying to cross down below the 200. And if price stays below that, they're both going to just continue downwards, right? Look at the 3 hour. Actually, let's look at RSI. Yeah, so stochastic super overbought. RSI starting to curl down below that signal line, right? That could be a bearish crossover right there. You've got market cipher B. Yep. Again, you've got VWAP coming down. You've got money flow in the red. It is trending up a little bit. You did get a little green dye here, but we did get a little push right there. And you've got your momentum, which is trending downwards and starting to fall to the downside, right? So that's the 2 hour chart. Let's look at the 3. The 3 hour chart is telling us we've got massive resistance at 95.6. Again, we got rejected here. We got rejected here. That was when it was the 100 moving average. Now the 50 is down there and the 100 and the 200 is below the 100 and it's still above the 50. So until we get above that, we're not going to see those trending upwards. So everything is, you know, favoring downside right now. Again, stochastic getting into that overbought territory. RSI staying just above that 50% line, but having serious hard time getting into that overbought territory. And now it's trending down towards that signal line yet again. And then same thing on market cipher B. We did see a green dot, but we are seeing this massive fall in momentum from about right here. From about right here down to about right here, which makes sense because that's what's happening on the chart. But you've also got money flow that's come out. VWAP is crossing down. I mean, you might see kind of like a little bit of a bullish divergence here with the, what's it called? The momentum trending upwards. Let's see what price was doing in this same Friday, January 10th. Now, price is trending downwards. Kind of. I mean, this is a super tight range. It's really hard to say like this is a bearish divergence. Yeah, it's going to be really hard to call that a bullish divergence. So, yeah. Anyways, let's get to the 4 hour chart. Let's see what's happening there. We're going bottom up analysis instead of top down. Yep, massive resistance, 95.6 yet again, rejected, boom, rejecting again here. We've got stochastics in overbought territory, trying to curl back up towards it. It's probably going to fall again. You got a green dot on market cipher. You do see money flow kind of trending downwards. VWAP crossover did come to the upside, but you have a red dot which is not a good sign on Market Cipher. Then you also have a bearish formation, the 50 being under the 200. And you've got your massive resistance here at 95.7, which is the 100 moving average. And you've got your massive resistance here at 96.4, which is the 50 moving average. And then you've got your massive resistance here, which is the 200 moving average on the 4-hour chart at $97,600. And you've got the point of control at 98.5. And then you've got the value area high. You got a lot of stuff to get through in order for this to be bullish. And you don't have much to get through in order for this to be bearish. You got the 9 and you got the 20 moving average. That's it. Then you got the value area low, right? And then this swing low. And then it's a free fall, right? It's just not great looking, right? Let's look at the 1-day chart. We won't get too into the weeds with the 8s and the 12s. Yeah, so we're under every single moving average that matters. And which is the, well, not every single one that matters, but the 50 is above the 9, and the 9 is under the 50, and so is the 20, right? And we're under all three of those. The 200 is literally all the way down here to $85,000, right? And then you've got this right here, 74,000, 73.5, that is kind of your 200 moving average on the daily. And then of course we know what we see on the daily chart, which is this massive head and shoulders pattern that dates back to pre all-time high, right? That dates back all the way to, the beginning or to the middle of November. And then this is actually a really good question. Then I'm going to get to your question here in just a second. Tim Schwally in the comments section. Appreciate you, my man. So let's go to the weekly chart, and I'm going to show you what I'm talking about here. All right. This is our weekly candle close, okay? This is an extremely bearish sign, all right? Whenever you come up in a week, okay? So first off, we came up and we got outside of this value area high. Then we immediately came all the way back down to the value area low and closed below the point of control on the next week. Same thing here. We came up, tried to test the value area high, didn't get to it, came to the value area low, closed below the point of control. Last week, we tried to test and close above the point of control, right? We couldn't get it. We didn't get it. And then it was a big move down, right? We tried to come up and reclaim the value area high, but we couldn't do it. And now we've got a massive amount of ground to gain from $94,800 all the way up to $98,300 in literally less than 4 hours. Well, yeah, it's about 4 hours and 20 minutes exactly before this weekly candle will close. And if you know what this weekly candle looks like, it looks like a really bad candle. Okay, this is basically what is known as almost, it's not a spinning top, but it's more of like a star, right? Where it's indecision. And in an uptrend, when you get candles that are indecisive like this, that's not what you want to see. When you see a big hammer come at the top, right? This is also pointing towards downside. You had almost 3 hammers print in a row on 3 weeks in a row. Now, this is more of the same type of candle as this, right? And that's when you see that massive fall. Then you've got what's called a topping tail right here that also in an uptrend, when it comes near the highs, right? It absolutely signifies downside. Then you had a little bit of rejection here, and then you've got an indecision doji candle right here. It's not a doji, but it's more of like an evening star where price could fade, okay? And if you want to know what an evening star is, I'll show you exactly what I'm talking about. Sorry, I tried to click on the wrong thing. So you're looking at a smaller candle in between a larger green candle, and then you'll see a big bearish candle that comes afterwards, right? So what are we seeing right now? Big green candle, a smaller candle that closes with inside that body, and then you could see a big red candle that comes afterwards. I'm not saying that this is an evening star. It's definitely not perfect. What you would rather see is a candle that looks a little bit more like this, right? With a smaller body and like, why is this doing this? Like a smaller body and larger wicks, right? So that's more or less what you would rather be seeing, but this does have those types of vibes on it, is my point. So just be cognizant of that, because that's what we're seeing on the weekly chart. Now, For the weekly chart, where do we need to close above? I mean, we've got 4 hours and 20 minutes left. I mean, honestly, we just have to close above this value area low in order for us to remain like semi like okay, to where we're not thinking, all right, we're dropping all the way down to here, right, to $80,000 in this range. And then even further more than that, this is our line in the sand, the $74,000 range. Now, I want to address what Tim Schwally's talking about. So we do have PPI data coming out. Okay, we've got unemployment, and then we've got PPI, which is producer price index, right? So if those numbers do come in good, like higher than expected, then we could see the Bitcoin pumping, right? But if they don't, Bitcoin's going down, because guess what's going down too? The S&P. And then guess what's going to pump? Gold, right? So just understand that from a foundational perspective, that PPI data is definitely going to determine where the market's going. But secondarily, the open of the S&P futures here in about 3 hours and 15 minutes is also going to determine that, okay? So just take that all into account whenever you are looking at your trades, or, you know, looking to enter or exit your trades, right? As it sits right now, I'm staying short. I'm going to stay in my short position. Why? Because it's profitable, man. It's got, you know, locked in 18 hundo, and I'm good with that. You know, I want to keep that position, because if we ride it to further downside down here to the 80 to 82K range, which is where I think we're going to get that catch point to then kick to a new all-time high, then ETH hits that $5,000 mark that actually kicks off our altcoin season in 2025 after the inauguration happens, right? Then that's what I'm seeing. Okay. Other thing that I want to let people know, right? Yeah, right here. High PPI is going to stoke inflation fears, less rate cuts, S&P down, right? So if we come in super hot on that PPI, we're going to see, did I say it the opposite way? If I be banging through stuff, so if I said it the opposite way, that's my bad. PPI is going to be inflation numbers, right? From a producer's standpoint. So if you see inflation numbers come in higher than expected, you are going to see the S&P open down, and then you're going to see Bitcoin going down, being dragged down by the S&P, because people are going to see inflation happening at a higher, more increased rate. And then there's going to be a flight from risk assets like Bitcoin and traditional markets like stocks to other markets that are a little bit safer havens like gold, right? So that's essentially what you're going to be seeing. So if PPI comes in hot, man, it's going down. If PPI doesn't come in super hot, I still think from a macro perspective, if you look at the S&P, there's a massive head and shoulders and there's a massive head and shoulders on the daily chart that we can look at, and I'll show it to you right now. This is like the one thing that we're seeing that could actually like bring the S&P up, which is a kind of inverted cup and handle pattern. Or my bad. This is the one thing that we could see that could bring, I got to turn all this stuff off and put it into a friggin' folder. Give me 1 second. ICH. Okay. So this cup and handle could actually take the S&P down. Now the S&P is right at the 100 moving average, and it's kind of like hit this support level right here, but it's hit it 1, 2, 3, 4 times. Usually on the 4th or 5th hit, you're favoring downside whenever you see a rounded top like that, okay? And you've lost the 50 and tagged the 100, right? Because we used to ride the 50. We used to ride the 50 up, rode it here, rode the 20, came back down, reclaimed the 50, came back down, reclaimed the 50. Now we're at the 100, could be going down. My point is that this inverse cup and handle could be the thing that takes us down to this $5,640 range, or at the very least, the $5,700 range, which is where there was some massive resistance that was then flipped to support, boom, boom, and then we rode it up, right? But you are seeing a rounded top. Now, the other thing that you're seeing on the S&P is this kind of like head, shoulder, head, left shoulder, right. Left shoulder, head, right shoulder. Sorry. I'm trying to bang through all this stuff as quick as I possibly can. Now, is this the best head and shoulders pattern? No, it's not. I will admit. It is not the best head and shoulders pattern, but Could it be validated right here? Yes, it absolutely could. If we break below this point at about $5,816 and we confirm below it with a confirmation candle, and then we back test it, we could be going down somewhere in this realm right here, okay? Damn, Daniel, $5,500. So if you do the 75% measured move, you're looking at about 56.50, something like that, in between 56 and 56.50. What actually coincides with that I'm already seeing on the chart, and hopefully if you've been watching me for long enough and you've learned stuff, you're seeing what's coinciding on the chart. That 200 moving average is trending upwards and could intersect right at the 75% measured move on this at about the $5,630 level. So if this breaks, this is probably where we're going. $5,630 level. And guess what that intersects with? Right here. Boom. That previous resistance. Okay. So that's what I'm seeing on Bitcoin, right? And let's put a ray there just in case. Where are we at? Boom. That's kind of your target right there. So let's do the head and shoulders on the 1 day. Boom. So that's kind of my point. Like if the S&P comes down, like Bitcoin's coming with it, unfortunately. That's just how these markets have been trending and doing, and everything that I'm seeing. There's very few bullish factors to Bitcoin, and there's very many non-bullish factors to Bitcoin right now. And the S&P being one of them is not awesome. So let's look at Solana. We got my main man right here, David Medeiros. I think I botched your name. I think I called you David Mendez or something earlier. I don't really know. I can't remember. But okay, so we've got the weekly chart up. We don't want to look at the weekly. We probably want to look at the daily. Honestly, I don't think Solana's looking like super, super terrible right now. Why? Okay, so as you can see, there's an upward trending line right here, right? Let's take this brush thing. I don't know why that's down there. Okay, so we've got an upward sloping trend line from like this bottom right here that was back in August, right? And as you can see, we rode that line 1, 2, 3, 4, 5 hits, right? We had a kiss here, 6, 7, we kissed it, we bounced, 8, we kissed it, we're bouncing. There is a little bit of a bear flag forming right here on the daily chart. That's not awesome. And then you do have a downward sloping trend channel that is coming into a massive area of support, which is first off this upward sloping trend line, and second off, which is this right here, which is a massive area of buying interest that used to be selling interest, right? So this was what is called an SR flip. We came up, we went back down, we came up, we went back down, we came up, we went back down, we came up, rejected, blasted through it, tested it as support, and then we could be retesting it as support here. So you could see Solana moving up. The one bad thing that I'm seeing for Solana right now is what you're going to be looking at is this not necessarily, I would not call this a mature bear flag yet. We need to see about 6 or so candles in order for it to be mature. In my opinion, 6 to 8. But you could see this inflection point, like from a micro perspective, you could see it get rejected here as this bear flag. And then this could be the inflection point where it hits the top end of this trend channel and then bounces down and then takes out these two and then bounces down here to the lows and continues downwards, right? But overarching perspective, from an overarching perspective, honestly, Solana's not looking terrible. I would be favoring downside if Bitcoin's going down, though. That's the problem. And then your massive, your kind of your mass potential for upside is right here, right at the $265 range, at least in the short term, because then you would be kind of trading inside of this range channel, which is this support and this resistance. Okay, so could you take a long here, right? If it retests 180, 182, 180, yeah, you could, absolutely. But I would absolutely set my stop loss like right out here at like 175, which is just under this trend channel, right? And I would honestly see the 200 being a potential bounce point, but with the 50 curling down and losing the 100 here, this 200 is almost going to be kind of your inflection point. So if it comes up and you see a big intersection of a bunch of different supports here and also resistances, right? Because this downwards trending channel is a resistance. This 200 is going to be a support. This white line is a support. This blue line is a support they've both held up for a very long time. Now, could this be the time that they finally break? Yes, it could be. But I would be favoring downside if Bitcoin decides to continue going further down as it is right now. But if you see a bounce here and you get outside of this channel and then you get a confirmation candle that confirms the breakout candle, it's got to be green outside of here, which would break out of this kind of trend channel, then that would break you out of and just like essentially test these as support. You get a green candle that gets you above this, then another candle that closes above the close of that candle, and then you retest this white line or this blue line and bounce. That's where you would be wanting to enter, and then you would set your stop loss below this 200 moving average because it is continuing to trail upwards, or somewhere in this trend channel because this trend channel is now going to be support if you flip it from resistance, right? So that's what I'm seeing on Solana. I mean, you've got two potential trades. It's coiling up right now. Should you enter right now? Honestly, no. I would not be entering a trade either way right now. Like, it's arguable that you could enter a short here, but what's your max upside on that short if Bitcoin doesn't go down? Your max upside is like literally right here. So you're riding it from what, 190 to 170. It's a 10% move. Or you enter here, right? And you know, it's testing right here at 180. And it doesn't break outside of this, you're taking it from 180 to 186, and then it falls. Like that, I would wait until we're over here. And this is going to be inauguration day. You're like literally like 8 days away from this. Or if you break above this, you know, before then you could enter on a back test of it. So that's kind of what I'm seeing on Solana, and I hope that's helpful, man. I really do. So if you, yeah. I mean, that's kind of what we're looking at on Bitcoin and all of the cryptos right now. So with all of that being said, let's see how it plays out. Obviously, I'm going to stay in my short position. Obviously, if you like content like this, dude, make sure you smash the like button. Dudes and dudettes, we love our crypto queens and kings. Make sure you subscribe to the channel. We're dropping bombs. We've been taking profitable trades for like the past 2 weeks. Boom! Bang on that notification bell, baby. We're going to keep this thing pumping. We're going to keep this thing, I mean, I don't know. You might see Bitcoin keeping this thing dumping. I don't know. We'll see how it plays out. But one thing that you can count on is I will let you know what the levels are when the levels are printing. So with that being said, make sure you follow me on Twitter too. Sometimes I don't have time for a stream and I got 5 minutes that I can put it on Twitter. I'll do it if I can. Just make sure everybody's in the know. With all that said, everybody show up to the streams. I appreciate it. I, love bringing the info, and I appreciate everybody that shows up. Seriously, it means a lot. You're taking time out of your life and spending your most valuable asset with me, which is your time. So DJ Craigie on the track. I appreciate him for supplying music as well. And we will see you all in the next stream. I appreciate it. Peace.